Good morning. Welcome to the XM.com weekly market update. And joining me once again is Peter McGuire, the CEO of XM. Good morning, Pete.
Good morning, Andrew.
Plenty of activity throughout the week.
Absolutely. Game on.
Volatility galore in multiple markets, which we'll touch on.
Currencies, bonds, commodities, you name it. They all got hit. Stocks.
Yep, the lot. So we'll start domestically as we normally do. The Aussie dollar, the Reserve Bank put interest rates up by 25 basis points, which was expected. They've got to get
IMF came out and said they wanted them to, so I didn't think. Yes, they had to.
Yeah,
there you
with
are.
The inflation where it is. So, and the Aussie dollar rallied on the back of it, but only briefly because it's given up. Not all of it, a lot of it though.
Yeah, it's about 63, 62 at the moment. I'm just looking at the screen, so that really probably it's over today. I won't be surprised to be a little bit lower. It seems to be in that downdraft, and are we going to test those, maybe the high 62s? We'll just have to wait and see how it plays. That US dollar's had a little bit of it's choppy, but maybe a little bit of strength there.
Yeah, and I think playing into that is obviously the China numbers as well, the economy there. So we've had both the CPI and the PPI came out this week, both slightly negative, but very low numbers.
Absolutely, and that backs onto Tuesday's numbers as far as exports, which were well down, and that was really quite damning on that export-driven economy model. China's, they've really got to do a lot of work, brother.
Yeah, certainly do. US last week, non-farm payrolls came in at 150.
Yep.
Forecast was 180, so slightly down. It's the labour market is still strong over there. There's no doubt about that. But are we starting to see a few
glitches in the armour?
Maybe. You probably need a couple of months worth of data. But it's you can't deny that it's been very resilient. There's no doubt about that.
I had a breakfast meeting this morning with a management consultant, and she's big end of town and big corporate and government, and they're really noticing a pullback as far as employment. There's putting a big knife through a lot of it, as from a redundancy. So I'm sure that the US is going to go through a similar stage, maybe later in 23, but certainly into 24. Earnings dictate that.
Yeah, of course, and the earnings
and shareholders demand it.
Yeah, but it's amazing. The earnings season wrapping up. It's wow. About 70% of companies beat earnings again. Yeah. Like every quarter we come out saying, "Is this the quarter?"
Is this a quarter? That's
right. It's amazing how it's hung in there, but we'll see how that goes. The services PMI also came out lower than expected, which that is probably not surprising considering where the interest rates are in the US.
Exactly.
Bonds, wow, what a market this has been.
Yeah, over to you, man. That is just wild. Have a look at for the viewers out there. Really pay close attention. The blue is pretty dramatic, but so is the red, because that 2-year bond yield is just quite incredible. What we've seen as far as move, and the 10-year. Wow, what a washout.
Yeah, it's a big that's off about 0.5% in sort of roughly 3 weeks.
Yes,
and a lot of that has come that sharp fall came off the back of the Fed meeting last week as well, where they basically said the interest rates are on hold for the time being. So, and the market is basically took that as higher interest rates are done. Now, whether or not that's the case or not, we don't know, but
that's right.
That's the way they read into it.
Well, I mean, when you look at last Friday, our report that came out on the Saturday, the S&P was up for that 5-day window last week, was up nearly 6%. Then you had Monday up, Tuesday up, I think Wednesday was even up, 8 days, and then it actually gave up some steam. But it's just been a tremendous rally to the upside, hasn't it, the S&P?
Well, you've got to, if you put your equity hat on.
Yes.
Now, the NASDAQ and the S&P have been reasonably strong this year. I know a lot of, a small amount of stocks have helped that. But if you're in a NASDAQ or an S&P ETF, it doesn't matter.
Rising tide.
And you're now coming into mid-November, if these fund managers have been sitting on the sideline of the equity markets and maybe in bonds or whatever, they've only returned 4 to 5%. And at the end of the year, if the S&P is at, say, 15%, it's not a good look. It's not a good look going out to the money that you're managing.
Exactly.
To those people to say, okay, I returned 5%.
Versus Harry was 14.
Yeah, or no, an S&P ETF at 14. You don't even need a fund manager. So, I reckon if the equity markets, the S&P and NASDAQ keep creeping up in the next couple of weeks, there could be a little bit of run into Christmas.
Blood on the streets as far as
well, once again, they talk about
jobs.
The Santa Claus rally, and November and December historically have been stronger months than September and October. So it'll be interesting to watch. So And now with the Fed sort of probably on the sideline to a certain degree,
I would
the next
say
couple of months?
certainly till you've got to get through retail sales and Christmas. They've got to see the health of the economy in January. Then you've got to get into February, and it's nothing. I don't think anything will happen at least till the start of March. So that's a that's a lot of water under the bridge in 4 months.
Oh, for sure, yeah. Another interesting market, if you're a trader, this oil market.
Wow.
Which we were talking about the last few weeks where it was just up, up, up.
Yep.
And it's fallen significantly in the last few days.
Yeah, I've spoken with Bloomberg, CNBC, ET Now, and a number of other networks in the last couple of days on that exact matter. And everyone's saying is 75 going to be, and there it is. WTI is at 75, and Brent is through now 80. So I think that downdraft, what's happening as far as Chinese numbers, what's happening as far as global demand, and the war premium, Andrew, Israel and Palestine, there was, people say was the war premium $3, $4. I think it was probably even up to $8 or $9 through the velocity of what happened on that October 7.
Yep.
I feel, this is my observations from the market, nearly 90% of that has been stripped out. So that war premium, and if there's no geopolitics driving it higher, then this is where the price is.
Yeah, I know. Well, that's what it looks like, yeah. So, which is, I think some governments will be very happy, which will keep inflation under control, so, or not let it run away again.
Yes,
so,
exactly.
And just speaking of oil, the last slide, just a graphic basically give us an idea of how big the oil market is, which it just dwarfs everything else.
Absolutely.
So, yeah.
Well, we were talking, you add up all of those 10 metals, and they equal 967 billion. And then you look at crude at 2.1 trillion. It truly is. I mean, we're at 100 million barrels a day. I was with OPEC, the Secretary General, last month in Fujairah. He came and said his forecast into 2045 is 116 plus million barrels a day. That's up 16% in the next 20 years. I think it'll be probably greater than that with the population base.
Yeah.
So it's one big industry. And when you see those, that's why it impacts everything, as you just showed with the downdraft as far as price, what impact that is to currencies, other commodities, and the workforce.
Yes.
I'll just leave it with one thing. I was on a panel the other day out of the Middle East, and one of the speakers is an ex-NYMEX man. He worked at NYMEX for about 35 years in New York, and he was saying that America produced 13 million barrels in August, and that was a record. So we've got a new administration. Well, pardon me. There is a chance of a new administration in the US in less than a year.
Yep.
What's that going to do? What's going to happen to electric vehicles? And if Trump is elected, he has told everyone it's drill, baby, drill. So they will become self-sufficient, and this could really boost that number.
Yeah, it's interesting, but just the size of that market, just a simple graphic.
Oh, it tells a story, doesn't it?
Certainly does, yeah. So, but plenty going on. Earnings season sort of starting to wrap up, which has been probably better than most analysts expected.
Yep.
Most of the
You were saying 65 or 70% beat expectation.
Yeah, so they're certainly hanging in there. So that's got maybe a week or so to go, but we'll keep an eye on things. But plenty of volatility heading into the end of the year.
Yeah, I want to see the Black Friday sale at the end of the month, how successful that's going to be, and naturally, retail sales in Christmas. And the success of that will be demonstrated by when we're talking in January to look at those sales and whether those corporations have hit numbers or the consumer is wrung out.
Yeah, pulling back for sure. But we'll certainly keep an eye on things, and we'll catch up again next week.
It's good to see you, man.
Great, thanks, Pete.
Thank you, Andrew.
And that's the XM.com weekly market update.